Let's get into today's top three things in my notebook. Number one, the euro. Number two, bond yields. And again, globally, bond yields collapsing this morning. Sentiment would be number three. So first, I just want to hit on this burning euro theme, which we've been very consistent on throughout the year. In January, we positioned that the intermediate term mean reversion level for the euro was 105. If you look out long term, we're actually at 80 for the euro versus the US dollar. But again, for now, we're ticking closer to $1.05. And again, all that does is perpetuate more deflation. So again, this is really perverse, but as these central planners in Europe devalue their currency, tell people they're going to buy negative bond yields, they're going to do whatever it is that it takes, what you're going to get is a devalued currency that gives you a stronger dollar and gives you more deflationary forces because, of course, the world's risk in deflation terms, particularly anything that's related to commodities, is really trading relative to the dollar. So again, it's a pretty straightforward theme. Again, we wanted to be consistent in reiterating that this morning. The current risk range for the euro versus the dollar is 105 to 108. Now, second point would be global bond yields. What's fascinating again this morning, I would say, is not that Swiss bond yields on the 10-year, as many of you know, are now negative and have been negative, minus 0.13 to be specific. And not that German bond yields are collapsing. I think that's been happening too. To me, what's most interesting this morning is that Dutch 10-year bond yields are trading at 0.27%, which is inside of Japanese government bond yields. So we're actually getting close to where French bond yields will be trading inside of Japanese government bond yields. For those of you who followed sovereign bond yields any other time other than this year, obviously the manic media is focused on it now because you're seeing a collapse. But again, no bond yield globally has traded below the Japanese government bond yield for a sustained period of time, never mind multiple European bond yields. So again, what this is signaling is more deflation. So again, you would never buy something with a negative yield unless you absolutely expect deflation. You can call it whatever else you want to call it. A central planner could say, well, that's not deflation. But the expectation in that investment is explicitly deflationary. So again, think about that for what it is. A year ago today, there were only 20 billion securities globally that traded with negative bond yields. Now there are 2 trillion and rising. So again, people are buying negative yielding bonds because they have deflation as an expectation. Now, point number 3, sentiment. And I'll talk about U.S. equity market sentiment specifically because I do think it's a buying opportunity today in U.S. equity specifically. It was more a buying opportunity into the close yesterday, but why mince words? We timestamped that anyway. In real-time alerts, we signaled to buy consumer discretionary yesterday. We like that. We like healthcare stocks. We like housing stocks. We actually would buy the Russell 2000 here too. And the main reason, one of the main reasons is sentiment. Now, I can look at sentiment in 2 very simple ways. If I look at the risk range of volatility on the front month of VIX. Now, again, we're at the top end of the risk range for VIX. So the VIX could easily go back into the low 14s. That would give you a springboard bounce in U.S. equity beta. So that would be a point number 1. Point number 2 on sentiment is that the II Bull Bear survey, which comes out every Wednesday, and we look at the spread between bulls and bears, last week hit pretty much an all-time high. Now it's collapsed really, it came in really hot. So if I look at the spread between bulls and bears this morning, that's currently 3,950 basis points wide, which is really wide. But again, the all-time wide was closer to 4,460 basis points wide. So again, sentiment is your friend for a trade. Whether or not we make this more of a trade than, and into a longer-term trend, we'll have to update you every day because again, that's how we roll. We change our mind every day based on the information that we get. And those are your top 3 things.